it's a little bit complicated maybe for students, but it's not really that difficult. So once again, if maybe you have just joined, we are talking about ledgers. The topic is about ledgers. The topic is about ledgers. There's something called ledger. So that is how you read it. Talking about a ledger. This is a topic. Ledger is a topic, okay? Candidate ledger is a topic. And this topic is all about accounting, okay? So it is all about accounting. And while talking about ledgers, so the first thing you need to know, what is a ledger? So what is a ledger? So a ledger, it is the book of accounts where the transactions are recorded. So a book of accounts where transactions are recorded, we call it a ledger. Okay, then it has a format. It has a format. So an account as so its format is it is in the shape of T. Okay, always it is in the shape of T, because if I give you the sketch of a ledger, you'll have something like this, where you have the DR, then you have the CR, then here you write the title. So you write the title, then you say stroke account A stroke C. Okay, so we are being told that ledger has three basic features. Ledger has three basic features, and one of them is the title. One of them is the title. This is the name of the account, usually centered at the top of the account. So the title should be centered at the top. Okay, it should be at the middle there. It should be at the middle. Let's say, for example, we are recording cash. So it is going to be cash account. Okay, so let's say we are recording cash. So it is going to be cash account. So that is how it's going to look like. So this is the DR is meant for the debit side, and it should be on the left hand side, while the CR, its full name should be credit, the credit side, and CR, that it should be on the right hand side. So as also seen in my notes here, debit side, this is the name given to the left hand side of the account, and it is usually abbreviated as the DR. Then on the credit side, this is the name given to the right hand side, and it is abbreviated as the CR. So top student, so this is now how a ledger looks like. So on your left hand side, you're going to have the DR, that is the debit side. On the right hand side, you're going to have the CR, which is the credit side, and at the middle you're going to write the title. So let's say maybe this time the title, it is a transaction involving the bank. So at the middle there we rewrite bank account, bank A stroke C. So that will be their title. So that is how that is the format for ledger. The format for ledger, it's very simple. Then within it, we are going to add the date, we are going to add the details, and we are going to add the folio. So it's very simple. So it's not that difficult, and also the amount. Okay, each side of the account has 4 columns. So being told that each side of the account normally has 4 columns. So we have the date. You need to have the date, you need to have the particular, or you can call it the details. You can call it the particulars, or you can call it the details. Then you need to have the folio column. Folio column is meant for the pages. Folio is the pages of ledger. The pages of ledger, we call them the folio. So the folio column is where you write the pages of ledger. Then lastly, we have the amount column. So you have the 4 columns in ledger. We have the date. You can call it the particular. The second one, you can call it particular, or you can call it the details column. We have the folio column. We have folio column are meant for the pages, and lastly we have the amounts column. Okay, now for example purposes, folio cannot really express itself because folio are the pages. You know, the folio unaenda tu kuipata kwa the ledger book. You know, when you're having the ledger book, utapata that maybe you are writing cash. Now this cash, it is affecting ile ingine uliandika page 7. Unajua kuna kitabu mzima. So unasema that the cash inaandika kwa page 86 ilikuwa kwa unaandika pale ni ile inaffectiana na ile ya 7. Ya page 7. For example, maybe you are writing maybe tuseme account ingine ni ya motor vehicle account, na pengine umenunua gari ingine. So unasema that hii motor vehicle account link na ile wakati siku nyingine tulikuwa tumeandika tumenunua gari ya motor vehicle nyingine, maybe it was on page 13, na sasa hii unaandika umenunua gari nyingine for business, maybe this one is now page 26, so unaandika ile page 14 hiyo zinaendana na hii page hii ya 26. So that is the folio ni ya pages. So kwa exam pages haiwezi kuwa, kwa sababu exam mtu anafanyanga kitu kwa one page, ama hata kama ni 2 pages. There's no need ya kitu ikiwa hii side na hii side unaonyesha that iko kwa page fulani. So for exam purposes, there's no single day you are going to use the folio. Okay, but outside the world, that is now outside exam, now you can use the folio whenever you're now recording the ledgers. So for exam point of view, folio we omit it because vitu za pages mbili surely, because pages, so you're not going to write, because most of the time we're just doing it actually even on a single page. But even if you do it on 2 different pages, there's no need of writing the folio because that is very small. So the essence for folio in ledgers ni ile wakati sasa you are doing it for business. Umefanya transactions kutoka January to December, ama maybe umefanya transaction from January 1st to January 31st. So for 30 days, of course, you are going to have many transactions that maybe sometimes might be more than 1 page, but sana sana ya mwaka mzima ndio zinaweza kuwa mingi. So 12 months, of course, you are going to have a lot. So hiyo ndio unaweza tumia folio kuonyesha hii account inaffectiana na account fulani iko another page. So that's that. So if I redraw the format again using now the concept, so maybe I can show you the format once more. So this is how a ledger looks like. So this is how a ledger looks like that way. Then here you have the DR on the left hand side, you have the CR on the right hand side. Then at the middle, you are going to write the title. The title for ledgers depends. It varies depending with the question. It varies from one form to another. Okay, I've shown you the example for the bank account. I've shown you the example for the cash account. Let's say maybe this one is purchase account. Just an example. So this one, let's say, is that maybe it is purchase account. It varies. I'll show you how you're able to tell whether it is purchase account, how you're able to tell it whether it is bank or cash account. So let's say we have purchase account, then the title is there at the middle. Then this one is just the format. Then you have the date, then you have the date, then after the date you have the details, or if you prefer to write particulars, you can write particulars. So you have the details after, then after that you have the folio, which I've told you that for example purposes we'll be ignoring it because it is the pages. Or sometimes you can just write it, but you're not going to write the pages. Then here you have the amount. Here you have the amount. Then you repeat it on the other side. You have the date. You have the details. You have the details. You have the details. Then after the details, you have what? You have the folio and amount. And amount. Yeah, so that is the format for ledger. So hapa katikati ni title. Hii ina vary. So hiyo nilikuwa napea tu na example. So yani hapa inategemea, title will vary from one question to another. So the title it keeps changing. It keeps changing the title account. So it can be purchase account, it can be sales account, it can be capital account. It varies, okay? It can be anything. It varies from one form to another. Okay, candidate? So it varies. It can be anything. It can be revenue account. It can be expense account. It can be equipment account. It can be furniture account. It can be anything. It depends with the transaction that you've been given. So this is the format for ledger. This is the format for ledger, candidate. This is the format for the ledgers. This one is the format for the ledgers. Okay, unless if somebody has a question up to this point, you can ask. And the ledgers, they are slightly different with the cash book. The only difference with the cash book is that the cash book, in between there is a double line. You know the cash book one, hapa katikati yao unagawa na double line, lakini ledger unagawa na single line. So that's the only difference. Okay, but cash book is a type of ledger anyway. So the rest is just the same. The only difference is that for the cash book, hii katikati tungeweka lines mbili, double line. Cash book tungeweka, yani tungegawa hapa na double line. So but ledger to just a single line, debit side, credit side. So I believe now you know that. Okay, so for the cash book, you normally need 2 double lines at the center here. For the cash book, you need 2 double lines at the center to separate them. But for the ledgers, just a single one is enough. Then let's now talk about rules of recording transaction in ledger accounts. So we want to talk about rules of recording transaction in ledger accounts. Okay, so let's talk about assets. Let's talk about assets. Okay, let's talk about assets. So what is the rule in terms of recording assets in ledger accounts? So the rule is, whenever you are recording assets in ledger accounts, and actually I've written it here, an increase in asset is recorded on the debit side. We say it is debited, while a decrease is recorded on the credit side, that is, it is credited. So these are the rules of recording transaction in ledger accounts. You need to master this at your fingertips. This one is the key thing in ledger. So these rules, you need to master them, because whenever you're going to record these transactions, you're going to use these rules. So these rules, you need to capture them at your fingertips. Candidate, rules of recording transaction in ledger accounts. So the rules, so let's start with the asset once more. So an increase in asset. So whenever an asset has increased, you need to debit it. And if it decreases, you need to credit it. When you say it is credited, you need to put it, or you need to write it on the credit side. When you say you need to debit it, you need to write it on the debit side. So that is on the asset. So increase in asset, you debit. Decrease in asset, you credit. Let's go to another one. So these are the rules first. Rules of recording transaction in ledger accounts. And this one was the format. This one was the format for ledgers. Okay, let's go to the second one, is liability. Okay, the second one, let's go to liability. Okay, and what is liability? Maybe kwa ile mtu mwenye anasahau. Liability ni like loans. Liability ni ile it is a form where you're going to owe somebody. Let's say maybe you have bought maybe a car on loan. That is a liability. So any form of loan, madeni, credits and loans, those are liabilities. So when you have money for other people, okay, or when you owe other people, so that is liability, the loans. Okay, so an increase in liability is credited, while a decrease is debited. So whenever the loans increase, whenever the liability increase, you need to credit it. And when they decrease, how can the loans decrease? When you pay them. So let's say maybe you have a loan of 1 million. When you decide to pay 400,000, okay, that 400,000 that you are paying to reduce your loan, you are going to debit it. But the time you are acquiring that 1 million, okay, at that time you are incurring that loan. So you are acquiring that loan. So when you are acquiring that loan, you are going to credit it. So an increase in liability are like loans, you credit it. A decrease, you debit. Let's go to another one. Let's go to capital. So what is capital? Capital are the owner's claim in a business. So the owner's claim in the business is what capital is. So capital is the owner's claim in the business. You call it the capital. So so what is the rule under capital? An increase in capital would be recorded on the credit side of the capital account, while a decrease in capital would be recorded on the debit side. So if a capital increases, you need to credit it. An increase in capital is credited. A decrease in capital is debited. So that is another rule of ledger. That is another rule of ledger. You need to master these rules. You need to master these rules at your fingertips. You need to master them off head with a lot of ease. With a lot of ease. Okay, that is capital. So capital, let's say that an increase in capital would be recorded on the credit side of the capital account, while a decrease in capital would be recorded on the debit side. Let's go to expenses. How do you record expenses? How do you record expenses? How do you record expenses? Now, expenses, what are expenses to start with? Okay. Expenses ni zile vitu umetumia kwa biashara, yani pesa zile umetumia kwa biashara. Pengine umelipa wages and salary, pengine umelipa electricity bills, pengine umelipa water bills. So those are the expenses. These are costs incurred in running a business, such as salaries and insurance, water bills, electricity bills, okay, rent paid. Okay, when you pay the rent, those are expenses. Depends on how you look at it. There's rent received and rent paid. They are not the same. So when you are paying the rent, it is an expense, but when you receive that rent, that will be revenue. So hizo vitu mbili hazifanani. Rent, wewe kama mwenye analipa rent, hiyo ni expense. Lakini kama wewe ndio unalipwa hiyo rent, rent received is revenue, but rent paid is an expense. So expenses, how do you record expenses? An increase in expenses is recorded on the debit side of the affected account, while a decrease would be credited. Okay, yes, an increase in expenses is recorded on the debit side of the affected account, while a decrease would be credited. We are still talking. These are rules that the accountants, they have given us to use. They've given us these rules so that we can use them whenever we want to prepare ledger accounts. So whenever you want to prepare ledger accounts, these are the rules that you need to use. Let's talk about revenues. Actually, ledgers is all about understanding these rules. After done understanding all these rules, that is the end of it. So you just need to understand these rules. Let's talk about revenues. Revenues refers to incomes earned from sources other than the normal trading activities. So the revenues that you are able to get from your business, the profits, for example, the discount received, the commissions earned, so things like those ones. So the commissions that you are given, okay, commissions, the discounts, those are revenues. So revenues refers to incomes earned from sources other than normal trading activities. You see that other than normal trading activities, because if you are a salesperson, for example, and you are given the commission, you have your basic salary. You are not saying the basic salary is the revenue. So those small payments that you get are outside your main form of income. We call them revenues. Okay, yes. So revenues refers to incomes earned from sources other than the normal trading activities. Examples are the commission and another one would be rent received, when you receive the rent. Another one would be the discount received, and many things. So what about the revenues? An increase in a revenue is credited in the affected revenue account. So an increase in revenue you need to credit, while a decrease would be debited. So an increase in revenue is credited in the affected revenue account, while a decrease would be debited. So you need to know these rules before we start. So you need to know those rules. So let's summarize these rules. There's how we can summarize them and master them better. Okay, there are formulas that you can use to master them better. So they've not talked about the drawings here, but you're going to talk about it. They have not talked about drawings, but maybe let me talk about the very last one before I summarize it. The drawings is our F. They've not talked about drawings. Let's talk about drawings. So first you need to know what drawings are. Okay, so drawings is money spent outside business. So when you spend, for example, let me give an example. Let's say you are a business person and maybe you have taken maybe 10,000 shillings from the business account, and these 10,000 shillings that you have taken from business account, you want to go and use it for hospital. You want to pay hospital bills using that 10,000. This 10,000 is a drawing because you are using it to pay the hospital bills, and the hospital bills they are not the same as the business the business activities that you would have used it for. So the money that you use outside business, okay, maybe to pay school fees, maybe for any sort of family use, so that one is considered to be a drawing. So ile pesa unatumia nje ya biashara, okay, ile pesa unatumia kwa kitu yenye si ya biashara, we call it a drawing. Okay, so a drawing, the money that you spent outside business, the money you spend outside business, example for family use, hospital, school fees, okay, vitu kama hizo, that is a drawing. So what is the rule about drawings? So the rule about drawings is that increase in drawings are debited, while decrease in drawings are credited. Increase in drawings are debited. Okay, yes, increase in drawings are debited, while decrease in drawings are credited. So that is the law about drawings. So there's always the summary about it. There is a formula that you can use to assist you to master them. Okay, so the formula is you need to write something called the dare. So let's start with the first one. So the first one is dare. The first one is the dare. So the first one is the dare, where the dare are the drawings. There are now the drawings. D for drawings, E for expenses, E for expenses, A for assets. So drawings, expenses, and assets. So drawings, expenses, and assets. So the dare. So the dare will assist you to master it. So these ones. So hizi ziko pamoja. So drawings, the dare, that is drawings, expenses, and assets. So hizi ziki increase. Hizi zote they are debited. So when they increase, so drawings ziki increase, you debit. Expenses ziki increase, you debit. Assets ziki increase, you debit. So all of them, increase in them, you debit. Kwa sababu ziki increase, easy, they are increase. When they increase, okay, their increase zote you debit. So nikionyesha hivyo, their increase you debit. So the opposite is now true. You debited. So their increase. So all their increase you debit them, okay? And what about if they decrease? Of course, when they decrease, you are going to credit them. But sasa tukishajua one side, it is automatically the opposite. So we just need to know. So when we say that increase in drawings, when they increase, you debit. Increase in expense, when they increase, you debit. Assets, increase in assets, when they increase, you debit. So automatically the opposite is true. So the other one is LCR. The other one now is LCR. So LCR would be LCR. So the LCR is the other one, where L is for liability, LCR. So LCR, then C for capital, and R is for revenue. So these ones, when they increase, hizi sasa zikiongezeka, instead of debiting, you now credit them. Easy what they are normally credited, okay? Credited. Yes, so when you say debited, it is put on there. Then this one, CR. So that's that. So LCR, liability can increase, you credit. Capital can increase, you credit. Revenue can increase, you credit. So the opposite is true. When they decrease, you now debit them. Okay, when they decrease, you now debit them. So those are the formulas of mastering them. So the DEA and the LCR. DEA ni increase your debit, LCR increase your credit. LCR. So the DEA and the LCR. You can never miss it. You can never miss it. Unless if you have a question. Now I've given you the formula of mastering the laws or rather the rules of ledger. So those are the laws. That is how you master it. You can never forget about it. So DEA ziki-increase zote you debit, LCR ziki-increase zote now you credit. So the DEA, D for drawings, E for expenses, A for assets, L for liability, C for capital, R for revenue. So DEA ziki-increase una debit, LCR ziki-increase una credit. Now opposite is true. So ziki-decrease utafanya the vice versa of what did not happen earlier. So that's that. Okay, ledgers have something called, we're almost now finalizing. So ledgers have something called concept of double entry. Okay, ledgers have something you call concept of double entry. Ledgers have something called what? Concept of double entry. This concept of double entry, okay, it is this one. For every transaction, there is an account to be debited and an account to be credited. That is what we mean by concept of double entry. So bookkeeping is based on the principle of contra entry, not co-account re-entry, contra entry. Contra entry. For example, for every debit made, there must be a corresponding credit entry. For every debit made, there must be a corresponding credit entry. So whenever you in ledgers, whenever you debit, you must credit. For every debit entry, there must be a corresponding credit entry. In other words, for every transaction, there is an account to be debited and an account to be credited. So that is the concept of double entry. So tukisoma tu transaction yoyote moja, unasomanga transaction one by one after the other. So when you read a single transaction, that transaction lazima uifanye ikuwe kwa njia mbili. Lazima hiyo transaction uionyeshe kama debit na uonyeshe kama credit. That is how you do ledger. So ledger lazima each account unaifanye kama debit na bado ifanye kama credit. So if you cannot do that in ledgers, that is 0 in the morning. Aya, recording business transaction in ledger account. So this one is just to be seen, itu ni ya kuona because nimeelewa tu vitu mingi. So recording business transaction in ledger accounts, some of the steps that you need. So itu ni ya kusikiza tu, there's nothing much in it. So one of the things that you need to do is take each transaction one by one. So normally you need to read it one by one. So your first match ikuwe ya first match, your second match ikuwe ni second match, ya 15th April ikuwe ni 15th April, ya kama ni ya 17th June ikuwe ni 17th June. So you read transaction one after the other. Then the second step, check the items that are affected by the transaction, name them, and every transaction must affect at least 2 items because iko na concept of double entry. So because iko na double entry, lazima ukiangalia ujaribu kuona hii kitu utaiweka aje mara mbili. Aya, then after that, classify each of the affected items as either assets, liability, capital, expenses, revenue, or even drawing, whatever we talked about. Then step 4, determine whether each of the items affected has increased or decreased, because pale tumeangalia the formula. We have checked on the formula, or rather the rules governing ledger entry, and you have seen that there are some of the rules that you need to follow. So whenever you're reading that transaction, you need to know whether what increased and what did not increase. So something like that. Then lastly, decide the side of account on which to make the record, whether to debit or credit. So you need to do that. So here is our first example now. So now these are now transactions. So we want to try. So this one is our first sketchy examples. So let's look at these sketch examples. Then we look at a Kcse example. So we want to look at this example. Okay. So here we are. So tuko na nini mbili hapa. So let's say example 204. Record the following transaction in ledger accounts. Candidate, tunaambiwa that received received 20,000 cash, received 20,000 cash in respect of rent paid, in respect of rent paid, received 20,000 cash in respect of rent paid. So it means that kuna mtu alipata 20k after amelipwa rent. Sasa unajua ukisoma hii kitu lazima uangalie unaweza represent mara mbili, because ledger you must always represent ledger twice. Na hii ni rent paid. Rent paid is an expense. Hiyo ndio kitu ya kwanza inafaa ring in your mind. Rent paid is an expense. When you pay rent, that is an expense. Na sasa rent was paid, so that one expense will increase. So automatically na working with the DEA, okay, DEA, because expense iko hapo, working na ile DEA unajua that ziki increase mtu anafaa kudebit, okay. So it means that tutakuwa na rent account, na rent is an expense, iki increase, so already tunajua hiyo tutadebit. Then received, so when you are paying rent, pesa zako zinapungua. So, and cash is an asset. Okay? Cash is asset, machinery is asset, furniture are assets. Okay? So, when you are paying rent, pesa zako za cash zinapungua. Okay? Pesa zako za cash zinapungua. And inafanya the assets decrease. And bado tukiwa within this there, where D is for drawing, E is for expense, and you have seen that the rent account has increased. And tumeona that cash is an asset, and it has decreased because cash is an asset. And when you are paying for something, the money that you have is basically decreasing because you are giving it away. Okay? So that transaction, we can record it twice. So where we have the cash, so the accounts, you need to identify the accounts. So we have the account that is affecting the cash. So we have the cash account and we have the rent account. So now we can represent that. So because the cash has decreased, it means that the cash account, we are going to credit it. Because if you look at this there, when drawings increases, you debit. When expenses increases, you debit. When assets increases, you also debit. But here, you are paying a rent. So the pesa that you have is basically reducing. So, and a reduction, now is the opposite of what you would have done if it was increasing. Because if it was increasing, you could have debited. So in this scenario, you are crediting it. Okay? So we credit the cash. Then automatically it must be, these two things, one must be on the credit side, the other one must be on the debit side. So you need to look at it in a manner that one of it is going to be on the debit side, the other one is going to be on the credit side. Both of them cannot be on the credit side. Neither can both of them be on the debit side. So you need to look at it in a manner that utakuwa umezieka in two separate ways. But if you are understanding one of them clearly, wakati umeelewa moja vizuri na uko sure iko kwa credit, automatically the other one is on the debit side. Na kama kuna moja unaelewa yenye iko debit, automatically ile ingine iko credit. So sometimes unaweza kosa kuelewa both of them, but provided una understand moja. For example, kama hii rent paid imetusaidia sana, because nimeelewa rent paid ni expense. Now we have incurred this expense. So I did not have much struggle on understanding whether I'm going to credit this or debit it, because rent paid, I know that is an expense, and in increase in expense you debit. So automatically the other one must be credit now. Okay, so the rent we are going to debit it. So there we are going to have two accounts. So ingine ya cash, so we just have something like this. But here we don't have the dates and all that. So maybe we are going to do a sketchy one. So we're going to do a sketchy one. We are not going to involve the dates yet. So that one. So, and we have the cash. So we're going to have the cash account. So the cash account, we are going to credit it. So we are going to write this 20. So the date and the details will be there, but let me just show the money. So 20,000. Then you are going to have another account, but your rent. So tutachora tena ingine. Mtu anachora chivo kidogo. I think this thing nilizichora pa chini badala kuandika vitu mingi they're here. So the cash account. So the cash account. then you put it that side, then you are going to have the corresponding rent account. So unaandika tu rent AC, umalizi yoyote A/C. A/C ina stand for account. So rent account, unaona tumedebit rent account because rent paid is an expense. Increase in expense you debit. Aya, let's talk about this lower one. Hiyo transaction moja tumemaliza. Let's talk about this lower transaction. Let's talk about this lower transaction. Now, talking about this lower transaction, before I give you a chance to ask some questions. So, purchased goods worth 30,000 on credit from Crown Traders. So, here being told that, let's look at this one critically. Purchased goods worth 30,000 on credit from Crown Traders. So, what has happened here is purchased goods worth that on credit, and credit from who? Crown Traders. Now, for every transaction, there must be what is debited and what is credited. That is for ledger. Whenever you are dealing with the ledger. Okay, so anything that is purchased, so the account of it must always be what? Purchase account. When you purchase something, so the account will be purchase account. Okay, so the purchase account. Then whenever you buy something or you sell something on credit, you have the creditors account. Okay, so the two accounts that you are going to have here is purchase account because of the word purchase. So you're going to have something called the purchase account. Whenever you buy something, you purchase something, the account is purchase account. Then the credit, because you are buying something kwa deni, the account is going to be creditors account. Creditors account. So we have two accounts. So tunataka kujiuliza gani tuna debit na gani tuna credit. Okay, it's very easy to look at it. When you buy something, candidate, when you buy something, you know, when you are buying something, you are acquiring something. Let's say you don't have a book and you go to a bookshop and you have now bought a book. What has happened? So now, let's say you had other books. Na sasa ukileta hii book umetoka nayo kwa bookshop, the amount of books that you have has increased. So it means that buying things increases your assets. Okay? So let's say maybe you want to go to the market and maybe get new furniture. And let's say you already have other furniture. So when you buy something, it is adding the value of your assets increases because there's that new addition, whether you are buying them on credit or not. But buying things has an effect of increasing your assets. So, and according to our summarized rule of ledger, we have said that when assets increase, the there, because the A there is for assets and goods are assets. So when you buy something, it means that it is increasing your assets. And now, because of that, purchase account, you must always do what? You must always debit. Because you must debit it. Because when you buy something, it is going to increase the value of what? It is going to increase your assets. Okay? So that's why you debit. So you debit because ukinunua kitu inafanya vitu kwa nazo iko mingi, na according to rules of ledger, increase in assets, you debit. Then what about creditors account? Credit, vitu za deni, hiyo ni liability. Credit, vitu za deni ni nini? Ni liability. Liability are loans and all those things. So, and according to the other rule, that is the LCR. Okay, the other rule, that one, the LCR. When these three increase, which is now the liability, L for liability, C for capital, R for revenue. When they increase, what happens? When they increase, what do you do, candidate? When they increase, you credit. These ones, when they increase, you credit them. And what happens to belong there? The credit, because credit is liability. Credit, vitu za deni ni liability. Liability ni vitu za deni. Credit is liability. Now, when liability increases, according to this, because when you buy something on credit, the amount of loans and debts that you have, they have increased. So now that they have increased, it means that you are going to credit. So automatically this one you are going to credit. So you're going to have those two accounts. So you're going to have your your ledger account, you write the title purchase account, then debit side, credit side. Then on the debit side, you are going to have the 30,000. So, and the reason why you are having that, the purchase of that. So on the side of the purchase, you're going to have 30,000. Then on the creditors account, you'll credit, because you'll credit also the same 30,000, and the examples should be below here. You can easily see them. So purchases account. So of course you're going to debit. You're going to debit that amount, purchases account, and this one they have decided to write it as cash, but the creditors would be much better. Okay, creditors account. But cash still makes sense, because the day you'll pay for it, cash zako zitapungua. The day you pay that debt, day utalipa your debt yako, pesa zako zitapungua. So that's why the cash is still logical, but creditors would be much better than cash, because the creditors side. So the amount of debt that you have is that. Okay, so that's that. Okay, so that's that. And so from Crown Traders, so that will be creditors account. Yes, so unless if somebody has a question, let me listen to your questions, then you want to do an example. Now, a proper example. Let me look for an example. Yes, in the meantime, anybody who has a question, you can ask. Your hand was up, Samuel.
Yes, Mwalimu. There is something you mentioned about rent. You said that rent is an revenue. Can you please clarify? Yeah, I'm saying, can you still clarify about what now rent became an expense now on this side?
Whatever I said was this. It was very simple and direct. I said rent paid. When you pay rent, when you are the person who is paying the rent, it is an expense, because you are not gaining. There's no way you are gaining from paying the rent. Okay, so when as a business person, you have your business in the CBD, and you are paying the space that you're doing your business, maybe 20,000 monthly. So you are paying the rent. It is part of your expense. The money that you are getting from your business, you're going to use it to pay. So it is an expense. But now, so the landlord who, okay, so now there's the owner of the premise, there's the owner of the building. So now look at it in the other way around. So as the person who is owning that building, so you're the person who has that, who is owning that building in the CBD. It might be the county government, it might be the individuals. So as the person who is owning that building, so unaona ni wewe unalipwa ile pesa. So wewe wa kulipwa ile rent, the other side, it is rent received. It is a revenue. It cannot be an expense, because wewe unalipwa. So that's why I said rent paid, rent payable. When you are paying the rent, it is an expense. But rent received, the person receiving the rent, it is a revenue, because wewe unapata profit. So that's whatever we say. Okay. Are you okay?
Yes, I'm okay now. Thank you.
Fine. Okay, let's now look at I don't want to work out examples. Hizo mtajiangalilia huko. We want something that has not been done. Let me see if we can find a question of ledger. You don't want to balance. The questions that we have here for ledger, the ledger questions. There are a lot of trial balances. At the moment, I don't have a proper question for the ledger, but let's do the trial balance. Then I'll look for the proper question once and for all. So I'll give you the question. Okay. Yeah, I'll give you the question for that. Let's talk about something called trial balance. Let's talk about trial balance. If you have any other question, you can still ask. Okay. Let's talk about something called trial balance. so that we can do them once. I've not got a proper question of ledger, but I'm going to take the Kcse question in a few. So let me just talk about the trial balance so that nikitafuta hata maswali zao nikiwa I'm done with them. Let's talk about trial balance. Trial balance is much easier. It is much easier compared to ledgers. Okay, it is much easier compared to ledgers. So let's talk about trial balance. The trial balance. A trial balance is a statement prepared at a particular date showing all the debit balances in one column and all credit balances in another column. Okay, the best definition for trial balance is that it is a book of account which summarizes ledger accounts. Okay, so what is trial balance? It is a book of account. It is a book of account which summarizes ledger accounts. So the function of a trial balance is to summarize the ledger account. So after you have prepared your ledger, so you're using the trial balance to summarize it. Okay, so trial balance it is the book of account which is used to summarize the ledger accounts. So when you want to summarize the ledger accounts, use the trial balance. So the errors is a theory. We are only focusing on preparing it. So let me show you the format. The rest are for theory. Sisi hapa tunaangalia tu, we are not looking at the theory part of it. So this is the format for trial balance. And it obeys the rules of ledger, candidate. It obeys the rules of ledger. So at the upper part here, you're going to have the title. Before that, you need to put it in that. That one is a little bit small. So let's make it that way. And you have that. Then you have the upper part. So this side, this is the its format. Here you have the details. This is the format of trial balance. The first one is the debit side. The second one is the credit side. Then on the top here, you write the title. Okay, you need to write the title. So its title will be very easy. Trial balance for Wanja traders as at 31st May 2024. Trial balance for so it can be the name of the business, okay, name of the business. So it can be even be anything. Trial balance for Samuel's traders as at June 30th 2020. What? So the title will just take the name of the information we given there. So just say trial balance for those things. Then after that, the details will always vary. It depends with what you have, but let's talk about them. Okay, so let's say you have the assets. Assets can be in many forms. So let's say you have the assets. Assets can be in many forms, candidate. Assets can be in many forms. So assets, it can be represented as, it can be machinery, it can be furniture, it can be written as fixed assets, it can be written as current assets, land, it can be land, it can be buildings. So assets can express itself in many forms: land, buildings, machinery, motor vehicle, motor van, bicycle, motorbike, name them. So assets can express furniture. Assets can express itself in many forms, and assets we normally debit them because for it to be represented in the equation, it means that it had increased. Okay, land, name them. So you're going to write the value that they have on the debit side. So if it was land, if it was land, you're going to write land, then you write even that 200,000. Okay, if it was maybe machinery, you write machinery here, then you write that maybe machinery it is worth 60,000. So that's that. Then you can have the liability. Liability are now all sorts of loans. Those sorts of loans. So liability, it can be a loan, a bank loan, 2-year bank loan. It can be whichever, how it is represented. It can be creditors. It can also be as creditors. So liability, loans, creditors. Creditors ni watu wako na pesa yako. Hapana, creditors ni watu uko na pesa, uko na pesa yao. So those are creditors. Lakini watu wako na pesa yao, pesa yako are the debtors. Okay? Yes. So watu uko na pesa yao, we call them the creditors. Okay? Yes, but watu wako na pesa yako, we call them the debtors. Aya, so liability whichever form. Then debtors na hizi naye ni rahisi. Debtors bado tu ni assets, lakini wacha tu niandike because inakwanga sana. Debtors, as the name suggests, liabilities, increase in liabilities you credit. Madeni zikiongezeka you credit. Unaona unatumia ledgers kujaribu kuzijibu, ledgers kuijibu. Debtors, debtor ni mwenye ako na pesa yako and it is an asset. So just like the other assets, you normally debit. Na hata hii ni rahisi, as the name suggests, DB, unaona DR hivyo. Then the opposite of it, creditor. Creditor ni watu uko na pesa zao. According to rule ya ledgers, increase in liability you need to credit. So utaandika hiyo side ingine, utaandika hiyo pesa hiyo side ingine. Another one maybe tunaweza ongeza purchase. Inakwanga common, tunaweza ongeza purchase. Purchase, ukinunua kitu utaenda up una acquire vitu zingine mingi, so itafanya assets increase. Purchase inafaa debit because when assets increase you debit. But sales, wakati umeuza vitu, ukiuza vitu ile asset ulikuwa nayo inapungua. Okay, kama ulikuwa na simu mbili na uuze moja, unaona simu zako zimepungua, na rules of ledger inasema aje? Decrease. Rules of ledger inasema aje? Decrease in assets you do what? You credit. So sales you credit. Okay, let's make it a little bit technical. There's something now called bado tunaendelea, so usiskip hii space. Ni vile sasa hatuna space hivyo, but si ati wacha niendelee tu. See, it's just a continuation. It's only that I don't have the extra space because there's another one that I've just remembered which is very important. So let me add what is now called purchase returns. Purchase, it's not the same as the other one. Purchase return. Purchase returns. So when you say purchase returns, and let me add another one, sales returns. They have another way of also calling they are the synonyms of them. I'll tell you the other name of them. Okay, so let's talk about purchase returns. This one is now very important candidate. Purchase returns. Inafaa ujue purchase returns unaweka wapi. Okay, purchase returns, sometimes you can buy something, then after buying that thing you can decide to take it back to the owner. Okay, and what are some of the reasons for a business person to decide to get back the commodity that you had bought back to the producer? So some of the reasons why you can decide to get back the commodity back to the producer might be maybe they have given you excess quantity, or sometimes whatever they have given you is not of the right quality. Maybe the quality is not good. So when the quality is not good and you feel maybe you want to return it, you might decide to return it, or maybe they have given you excess. So you bought it, but now you are returning it. So let's say maybe you bought a phone, so you have acquired the phone. Then now the same phone that you bought, maybe you have realized that its screen is already broken, or maybe its battery is draining very fast. So you decide to get it back to the vendor who sold it to you. So what does that mean? So when you are returning whatever you had bought, it means that your assets are decreasing. Okay, look at it in this sense, because you had acquired it before, but you are returning it. So you know, after acquiring it, it was part of your assets, but now that you are getting away of it, the asset that you have, you are losing the asset that you had. So because of that and the decrease in assets in ledgers, you need to do what? You need to credit. Okay, then let's talk about sales returns. So sales returns, sasa wewe mwenye uko na tabia ya kurudishia watu vitu, this time wewe mwenye unauzia watu pia urudishiwe. So you had sold, because these things you reason them from business point of view. All accountings una reason kama nini mwenye biashara. Hizi vitu zote, if you look at it, you always reason them from business point of view, not kama mwenye ananunua. No, you reason them from business point of view. So as a business person, when you have sold something, accounting zote they are business centered. Because wacha nikuulize swali rahisi, ukienda pale supermarket, ni wewe unajiandikianga risiti ama ni the supermarket that writes the receipt for you? It is the supermarket that records or produces the receipt for you. Why is it that the case? Because it is the business that they are in need of that book of account. You as an individual, sometimes you might be in need of it, sometimes you might not. Okay, so all these books of accounts, they are pegged on the businesses. Okay, so you always reason it from business point of view. So hata hii purchase returns ni biashara, it's maybe it is Naivas supermarket inarudishia maybe kampuni ya Ilara maziwa yao, wamepata zile maziwa waliwauzia. Sasa tunaangalia book of account ya Naivas. So Naivas wameona Ilara iliwaletea maziwa na hii maziwa ya Ilara zimeharibika, customers wamecomplain, wanazirudisha. That is purchase returns. Okay, so now the same Naivas, when I'm still at it, so zile maziwa walikuwa wameuzia watu sasa wanarudishia Naivas, so that is now sales return. So unaona, whatever you had sold unarudishiwa, to means that you had now less after selling something. Of course stock zinapungua, ukirudishiwa you are increasing your assets. So the opposite is true. So an increase in assets, now from the business point of view, ukiuza kitu rudishiwe, si zile vitu stock zinaongezeka, so you are going to do what? You are going to debit it. Kama inakuconfuse huwa ni rahisi, kama unajua kuelewa purchase, unaona purchase na purchase returns zinakwanga vice versa. So unaona purchase ni debit lakini purchase returns ni credit. Alafu sales unaona ni credit lakini sales return ni nini? Sales return ni debit. So zinakwanga vice versa. So unaweza reason, kama inakusumbua, you can reason out for sales then ufanye vice versa, ama unaweza reason for purchase then ufanye vice versa. So you can always work with it that way. Then another thing, sometimes instead of recording it as purchase returns, sometimes they can call it return outwards. So this one is the same as return outwards. So it is the same as, sometimes they can call it return outwards. Return outwards sometimes. So even if you have return outwards, it is the same as that. Because what does this mean? Return outwards. Nimwambia accounting zote, you center it from the business point of view. So return outwards, what does that mean? You as a business, you are giving your assets away. You are giving assets away. You are getting whatever you had bought, you are giving it back. Okay, you are returning it back. That is a return outwards. You are getting rid of it from the business. So it is a return outwards. So that is another name that they use for purchase returns. So purchase returns can also be called return outwards. And there's another name for sales returns. So sales returns can be called return inwards. So that is another name for it. So sometimes they write return inwards. Because what does this mean? Return inwards. So inwards, we are returning things inwards. When you say inwards, into the business. So we are returning things into the business. And the only instance we can return things into the business, we had sold them and the customers are not satisfied with the quality, or maybe the customers feel that they are excess, they are returning them back. They are returning them back into the business. So that is the other names for purchase returns and sales returns respectively. Then what else have we not captured? Maybe some of the expenses. So candidates, you need to know about expenses. So any expense in whichever form, according to our rules of ledger, that is the DARE, expenses. So the expenses you need to debit. And some of the examples of expenses, candidate, would be maybe there's rent paid. Okay, you are the person who is paying the rent, or rent payable. That is an expense. Water bill is an expense. Electricity bill is an expense. Insurance premiums, that is an expense, because insurance premiums, that will be an expense, and those things. So those are expenses. So what do? You debit them. Okay, yes. Then what about revenue? The last one is revenue. What about revenue? So revenue, according to the rules of ledger, revenue, what do you need to do? Revenue, you are going to credit them, because increase in revenue, the LCR, increase in revenue, you credit. So revenue, you credit. So examples of revenue: commission and Examples of revenue: commission and rent payable. No, rent received. Sorry, rent received. Now, when you are receiving the rent, so rent received is revenue. Commission earned is revenue. Discount received is also revenue. So those are revenues. Okay. I've missed on the capital. Capital also. Capital, according to the rules of ledger, capital we always credit. Capital you credit. Then after you have put everything that was in the equation, then now below here is the total. So you write total there. Then you add everything on that side. You add everything on the debit side. You're going to have an answer. You also add everything on the credit side. If you do it properly, the answers are always the same. The answers are always the same. The answer that is there will also be the answer that is there. So maybe if ulikuwa unapata 250,000 on the debit side, utapata 250,000, on the credit side pia utapata 250,000. So they'll always be the same. Okay, so that is how you prepare trial balance. So there are many questions related to the trial balance. So maybe you can look at the questions relating to trial balance. Then after that, we can now check on the question for the ledger. Then we call it a wonderful day. There's the example up here. Maybe you can look at this trial balance before we prepare ours. So we can just stare at this before we prepare ours. Then after that, we are going to prepare ours. So this is an example of trial balance. So for example, look at this candidate. So land and buildings. Land and buildings is an asset. An asset, we record it on the debit side. Capital, according to the laws of ledger, we have to record it. So this one was to be here on this line. This one was to be there, 94,000. Yeah. So capital, we need to record it on the credit side. Plant and machinery, that is an asset, we debit it. Motor vehicles, that's an asset, you debit it. 10-year bank loan, that is a liability, we credit it. 6-year ICD loans, so we do what? We credit it. Stock is an asset. Stock one asset, you debit. Debtors, as the name suggests, you debit. Creditors, of course, you are going to credit, as the name suggests. Creditors, you credit. Rent owing, you are owing. Rent owing, so you are owing some rent. So the rent owing, though this one is not a common term that they use in this is not the common term that they love using in business. Even in Kcse, they have not used it before. What they use is rent paid, and rent received. That is the Kcse way of putting it. So hivi ikiwanga hivi ni ngumu sana i-confuse mtu, ni ngumu sana i-confuse mtu. So rent paid, rent received. Then cash at bank, that is an asset. Cash in hand, that is an asset. Drawings, you need to debit. I forgot to add the drawings. Okay, so the drawings as well, I forgot to add the drawings, but the drawings as well, is there any space where we can fit the drawings? But drawings as well, you need to debit. Let's just fix it somewhere. So drawings move to debit. Kwa sababu gani drawings move to debit? According to rules ledger there. Sana tumesema there. Na tumesema hizi zote ziki increase unafanya nini? Hizo zote ziki increase una debit, sorry. So there ziki increase zote you debit, and drawings is part of it. So we are going to debit. Let's look at a proper example from scratch. Yes, we can do this question. Hebu niangalie ile kuna vitu mingi. Hii iko sawa. Hii ndio iko sawa. Hii number 4. Hii number 4 iko sawa. So, we want to do this question. The following balances are extracted from books of deeper traders as at 31st December 2000. Okay? So we are given the buildings. So you need to know whether you are crediting something or debiting something, candidate. You need to know whether you are debiting something or crediting. Buildings, that is an asset. When assets increase, of course, you are going to debit. Debtors, as the name suggests, of course, there's no doubt we are debiting that. Capital, increase in capital, you credit. Sales, when you sell something, the assets that you have, you are reasoning from the business point of view. Unajua kitu ukiangalia kama mwenye ameuziwa, unajua uta reason that vitu zake zinaongezeka, and that's a lie. You are reasoning these things from the business point of view. Okay, you reason these things from point of view, because when a business sells something to you, if you reason it from the consumer point of view, as a consumer, whatever you have is going to increase, and that one will be a wrong way of interpreting accounting. So accounting, you interpret them from business point of view. So when you say sales, it is the business that have sold something to you, and when they sell something to you, whatever they had on their shelves, they have decreased, and a decrease in assets, of course, we credit. Purchases, the opposite of sales. So when you buy something, of course, you're increasing more in your shelves or in your store. So that is debit. Stock is an asset, that is debit. Creditors, as the name suggests, that is credit. General expenses, that is from the DARE. Expenses, increase in expenses, we debit. Bank overdraft are like loans. Fuliza ni bank overdrafts. So bank overdrafts, Fuliza is the best example of bank overdrafts. Koji bank overdrafts, so hizo ni madeni, that is credit. So that is credit. So prepare a trial balance as at that. So you draw a rectangular vizuri kwa exam, unachora vizuri. You use a ruler to ensure that it is shaped nicely and well. So ensure that you have something that is nice. So then you write the title there. So the title, we can get it from that point. So you can say that this one is the trial balance. So trial balance, you can write in capital letters, there's no problem. So let's write the title. So you can say that trial balance for deeper traders, trial balance for deeper traders as at 31st, then please you'll finish that one for me, 31st December 2000. Okay, then after that you prepare your table in a manner that you have the details. Here we have the details. Then we have the debit side and we have the credit side. So how many of these things do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9. So I need 9 spaces. 1, that is 2, that is 3, that is 4, that is 5, 6, 7. Then I need 2 more. Plus the total, so we need 3 more. So we have the 8th, we have the 9th, and ile ya kuandika total, so we need 10 of them. You make it to be neat and presentable. So let's write them there. So is the building the first one? Yeah, sure it is. So we have the buildings. So you write it there. We have the debtors, you write it there. You have the capital, you have the sales, you have the purchases, you have the stock, you have the creditors, we have the general expenses. Please utanimalizia uandike general expenses, you will finish that. General expenses, we have the bank overdrafts. Also this one, please, you will finish it. Then we have the total. Then you'll show the total there. Last one, now you show the total. Then now you write the value, the corresponding values. So let's say the corresponding values. So the building was, you need to debit it. It is 100K. Debtors, you need to credit. You debit it. It is 54K. Capital, credit 136K. Sales, what do you do to sales? You credit, that is 85. Purchases, you need to debit, that is 48k. Stock, you need to debit, that is 25k 500. Creditors, you need to credit 37,500. Expenses, you need to debit, it is 31,800. Bank overdrafts, you need to credit, that is 2,500. Alafu unaad yote kienda chini, you should get the same answer. If you don't have the same answer, then you add everything. You don't circle it that way. I'm only guiding you on how to add. So you add them that way. So you add everything for the debit. What is debited? This one plus that one plus that one plus that one plus that one. Then you are going to write the total below it. Then you also add this one plus this one plus this one plus that one. So what are we expecting? The answer should be the same. Okay, we are expecting the answers to be the same. So if the answers are not the same, it means that it is either you have missed something. There's a region where you have not got it correctly. But if you are so sure with yourself, then maybe should we blame it on the question? It is the question that is not right. And maybe sometimes it is the question that is wrong. But no, most of the time the question is just accurate. So you just confirm if it is you who is wrong. You just need to re-look at it. You need to relook at it to counter check whether it is you who is wrong. So what do you find? What do you find? What about the debit side? So the debit side, if you add everything here, you want to see whether the totals, then you double underline. Then you double underline. Then you double underline. Then you double underline. Then you double underline the totals. So the totals, is this what all of you people are getting? That 259, 300. Is it what you people are getting? Then you need also to add the other side. You should be getting the same thing. So confirm to me if that is what you get. Then you double underline them. You double underline them. Okay, you double underline them, you double underscore them, you double underscore them. So that is what you do. So please ensure that you have added it correctly. Ensure that you have added it correctly. So you should get the same result. So if you're not having the same answer on both sides, there might be a region where you have missed something. So any question? So that's how simple it is. That's how simple it is to work out or to prepare trial balance. Trial balance, it is used to summarize the ledger account. It is used to summarize the ledger account. Any question? Any concern? And be very keen, ile purchase return na sales return, or return outwards and return inwards. Hiyo pia wanapenda sana. Commission earned inafaa ujue ni nini, commission received inafaa ujue vitu kama hizo. So it's always very important because itakusaidia sana. Itakusaidia sana. And unless if somebody has a question, I think this one is the one that we did. So unless if there is any question, unless if you do have any question, you can ask. You can ask. Okay, so allow me to stop at that point. So somebody is asking what? Before I stop at that point, there's a question here that I want also to show. Let me see. What is the question that you have in the inbox? Teacher, I didn't capture the point on which items are placed on general ledger. We talked about on general ledger. What exactly are you referring to? Unmute and ask me that question. I'm not able to get what you're talking about. I'm not able to understand what you're talking about, Lydia. Yes, Lydia, very fast. Unmute and ask the question. I'm not able to understand what you're asking. Seems she's afraid. Okay, now that I think let's stop at that point. I'll share the question. I'll share the Kcse question about the ledgers. Then you'll write it down. Then in the next class we'll just do it instantly, or maybe you can try it at your own convenient time. But searching for that Kcse question and all that might take time, and ledgers are also a little bit intensive. So I'll share that question in advance. Then just today, we'll just create time and finish with it. If it's not today, we'll finish it tomorrow. So thank you so much. Allow me to stop at that point. Thank you so much. I think that's the end of our class. See you some other time.